Welcome here to my channel Crypto B, and today I'm bringing some news to you around the crypto space, but I forgot to test my microphone and I need to see if it's working. Yeah, it's working, all is fine. Let me open here straight away my other PC so I can connect here and be in touch with you guys. Yeah, everything is working perfect. Great. How is everybody today? How is everybody today? So nice to be here, guys, with you. If it's your first time here, I'm not a financial advisor. I'm just a guy on YouTube who love crypto and come here every single time that I can to share with you information and like this to help you to get more knowledge and understanding around the crypto space. So when the time comes for you to make decisions, you know what to do. So before we start the show here, let's bring the intro. And welcome back. And let's go. Let me share here with you my screen. Guys, the market today is absolutely red. If you look here, the market today is absolutely red. Bitcoin went at some point went almost under 18,000, was 1800 something, right? Ethereum at 1,223. So we can see here in the last 24 hours, 3.41 down, percent down BTC, 5.59% down Ethereum. We have 2% BNB, XRP 3.54%, and reminder, XRP did very good on the last 30 days. So on the last 30 days, XRP did 38%. Wow. Cardano under 6%, Solana at 6% down and did 17% down on the last 30 days. Dogecoin, everything, guys. If you look here, there is nothing that is green. On the last hour, we start to see some retrace and some little recovery on the last hour. So Bitcoins did 0.37% coming back. But this must be the retrace from the drop. So if you see here the chart, it did a big drop. Let me open my trade view chart. So after we can watch the trade view. Oh my God, it's such a deep. But we know that we've been saying here on the channel for you guys as well that Bitcoin will drop and probably we will see around 10, 11, 12K. Some people are saying 3,000K, which I mean, it's crazy. It's crazy, but look at the drop here. This is a 3-minute chart because I was checking something before that. I was DCAing. So I do in a smaller, but look at these guys. This is BTC. Look the drop that did here of, let's see, 11 o'clock yesterday for 5% all the way down. Wow. That's, depends how you see this now. The reason why I want to start with the chart is because that everybody, okay, let me open so I can look here. Everybody cannot wait any longer for the bull market. Everybody is literally, oh my God, we need some recovery somehow. Some people, they are 75, 80, 90, 95% down on their portfolio. And it's hard, guys. You are not alone. But see these times of maybe potentially opportunities for you to start to DCA in before we actually hit the bottom. If the bottom is not already in, it's very difficult to understand. We don't have a crystal ball, right? But that's the reason why we DCA. So if there is any project that you still, and of course, if you still have any liquidity on the side, which is, I've been DCAing, believing that the bottom would be earlier. So we finished the liquidity. So we need to find more liquidity in order to start to DCA even more, to put the entering price lower, right? So, but there is let me open here. There is four for potential catalyst for the next crypto bull run. Okay, what's the bigger thing that can happen, that could happen, that would make we to have a new bull run? So according to the crypto briefing, the 4 potential catalysts for the next crypto bull run, they are often clear underlying reasons for when money starts returning to the crypto markets, right? The reason why we are in the bear markets because there is no money in the space at the moment. We actually have, let me go here, I'll tell you right now, we are $889 billion. We are like under, we are 3.38% below the last decrease over the last day, guys. So if we go there, some key takeaways here, I will reach you after here. So the first thing is a Fed pivot reducing pressure on the crypto. One of the most widely discussing catalysts that could give crypto and other risks assets a boost is an end to the Federal Reserve monetary tightening policy. Currently, the Fed is raising interest rates to help combat inflation. When price for goods, commodities, and energy reach unattainable levels, central banks step in to bring price down to avoid long-lasting damage to the economy. And this, guys, is actually happening worldwide. Worldwide. It's not only in America, it's not in Russia. There is a lot of things going on at the moment. We have a lot of things. Apart from this, we have the Ukraine war. So the economy in all over the world is like this. So that's why we see the inflation going crazy, right? So in theory, raising interest rates should bring about demand destruction. When the cost of borrowing money and repaying debt become too high, it prices out less viable and efficient business from the market. In turn, this should reduce demand and lower the price of essential commodities like oil, heat, and lumber, which is not the case. It's not happening this now. How much is the price of gas? Europe is going crazy for gas now. We are, especially now, we are getting to the winter. So, however, while the Fed aims to raise interest rates until its target 2%, that's the target, inflation rate, it's met, then that may be easier said than done, right? So it's easier to say this, but in practice, it's very difficult. Every time the Fed raises rates, it makes it harder for those holding debt, like mortgage, to make repayments. If rates goes up too high or stay too high for too long, it will eventually result in mortgage holders defaulting on their loan, a mass resulting in a collapse in the housing market, similar to the great financial crisis in 2008. Therefore, the Fed will need to pivot away from its monetary tightening policy before it's too long. And when it does, it should relieve much of the downward pressure, keeping risk assets like cryptocurrency suppressed eventually. So the Fed will also start lowering interest rates to spur economic growth, which should also act as a significant tailwind for the crypto market. When the Fed is likely to pivot up for debate, however, most pundits agree it will be difficult for the central bank to continue raising rates past the first quarter of 2003. Saying this, more or less, so people still believe that that's some of the reasons why people don't believe that we are in the bottom yet, because there's so many things to happen there, especially to do with the interest rates. We might see a beginning of bull run on next year, and that's, I mean, we are already almost 1 year in. 1 year in, guys. We are being on 1 year in bear market, right? 1 year. That's why people can't take any longer. Another thing that might be the catalyst is fintech crypto adoption. Of course, the more people adopt crypto, more people come in, better is for the market, right? At the moment, we are 800 billion of global market capitalization, right? Although crypto assets have made huge strides in recent years, the benefits are still fairly inaccessible to the average person. Like we say now, there is not the adoption of the mass, of the mainstream. Like my mother, for example, my grandmother, they don't know how to use crypto. But we need the mainstream, the majority of like 60% of the world population to adopt, right? That's what we want. Use cases such as cross-border transfers, blockchain banking, and DeFi are in demand, but the simple, easy-to-use infrastructure to mass onboard users has not yet been developed. All right, I'm going to read again because it's very interesting. The easier-to-use infrastructure to mass onboard users has not yet been developed. So maybe you watching this video right now, smash the like button, subscribe to the channel, but maybe you are a developer. We need to come up, look, I'm giving you some idea here. We need to come up with something that is easier to explain to a 7-year-old, right? And to my grandparents or your great-grandparents, be able to use easy crypto payments, all that kind of thing, right? So we start to get more, or at least the mainstream adoption have to start from somewhere, right? As it stands, using crypto is complex, right? Download MetaMask, have a DEX, use an exchange, and then there's hack, and then there's this which wallet to use. It's guys, you need to understand a little bit how it works, right? Some people, and we don't need to go far. Some of our parents, right, 70, 80 years old, they don't even know how to switch on the computer, right? So we need to make easier. As it stands, using crypto, it's a bit complex and far crying from what most people are using to managing private keys, signing transactions, and avoiding scams and hack might be intuitive for the average crypto degens. For us, for people who are here every single day, for us who are involved with crypto, on the space of reading news and getting knowledge. Remember what we said from the beginning, and if you follow me here on the channel, you know I always say to you guys, the first investment is on you. So if you are investing in yourself, this for you, what we're talking here, it's easier. You know how to to create a wallet, you know how to transfer money, it's easier for you. But you need to think beyond that. If we want massive adoption, we need to think our parents, our grandparents, kids in school. I mean, we need to expand our mind, right? But it remains a significant barrier to adoption for more casual users. That's what we've been saying, right? There's a huge gap in the market for onboarding the average person into crypto, the average Joe. If fintech companies start to integrate crypto transfer into their offerings and make it easier for users to put their funds at work on the blockchain, crypto could see a new wave of adoption as it becomes easier to use crypto infrastructure. More people are likely to recognize its utility and invest in the space, creating a positive feedback loop. That's awesome. Because sometimes you're gonna talk, I mean, you can ask sometimes in your household or your friends, how many people are connected to crypto and talk about crypto and understand crypto? When I talk about crypto, I have a lot of people goes, oh yeah, that Bitcoin thing, right? That I heard about that Bitcoin thing, right? Are you sure it's not a scam? I mean, people don't really, it's not out there yet, even though we know that it's getting bigger, but it's not what we want, right? We want more, we want mass adoption. Some companies have already recognized this vision and are working on products that make it easier for anyone to start using crypto. Early this year, PayPal integrated the deposit and withdrawal of cryptocurrency to personal wallets, marking a significant first step towards broader crypto payment adoption. Last month, Revolut, one of the largest digital banks, was granted registration to offer crypto service in the UK by the Financial Conduct Authorities. See, those kind of things that we are talking about. However, the most significant development may be yet to come. Robinhood, the no-fee trading app, the so-called meme stock mania of early 2021 and the subsequent Dogecoin rally is preparing to launch its own non-custodial wallet. Last month, the wallet's beta version went out to 10,000 early users, and full release is scheduled for the end of 2022. The Polygon-based wallet will allow users to trade over 20 cryptocurrencies through decentralized exchange aggregators, the OX, without fees. The wallet will also let users connect to DeFi protocols and earn yields in their assets. As its core, crypto bull runs are fueled by adoption, and products like Robinhood's new wallets could become the killer app to onboard the next generation of users. This is just an example here on the article, but how many other projects or great minds out there that can come up with something a wallet like? It have to be, in my way of seeing, it have to be something that is easier to explain to a child and as used to use friendly as possible to use for my grandparents. Right? By the way, I'm open for discussion. If anybody's watching this video here, you are away or you are a developer. I'm not a developer, by the way, but I can sure give a lot of insights. So that's what I believe. One of the things that will, guys, there is no catalyst or bull run without adoption. We need more people and more money into the markets, right? The next is obviously what's been happening for all this time is the Bitcoin halving. If you don't know what's halving, you're going to come to my channel. If you go in videos and we go down here, you can see there's a lot of shorts. If you go to my videos, if we go down here somewhere here, can Bitcoin get to the 250,000 in the next halving? And here in this video, I explain to you what halving is. Right? How it happens, the time frame of halving. It's all about halving this video here, and have only 51 views. So I need some people to join his message, the like button, subscribe to the channel in order to help me to grow. So Bitcoin halving is the next catalyst that I believe. Coincidence or not, a new bull rally has historically commenced shortly after the Bitcoin protocol halves its mining rewards every 210,000 blocks. This catalyst has predicted every major bull run since the first Bitcoin halving in late 2012 and will likely continue to do so well into the future. So as you can see here, first halving was November 28, 2021. And look what's happened from here. All-time high, all-time high. And then bear markets, as you can see here, following my mouse, right? Then here, second halving, July 9, 2016. And then what happened after that halving? All the way up here, all-time high. And then bear markets. And then third halving, May 11, 2020. And then all the way to 69, 70,000 K. And now we are bear markets. So, following the first halving on November 28, 2012, Bitcoin soared over 70,000%. The next halving, 7,000%, and then the next halving on July 9, capitulated the top cryptocurrency up around 2,800%. And after the last halving on May 11, 2020, Bitcoin moved up more than 600%. Of course, it goes up less than when on the first time there was 7,000. The last one was 600%. Still great, right? The most likely explanation for the halving rallies that have taken place roughly every 4 years, is simple supply reduction. Economic theory posits that when the supply of an asset reduces but demand stay the same, its price will increase. Bitcoin's miner typically sell a large portion of the Bitcoin's reward to cover the cost of electricity and upkeep of the mining machines. This means that when rewards are halved, this selling pressure is drastically reduced, while this initial supply reduction acts as the ignition bull rally, often, often take crypto high, much higher than can be attributed to just the halving. At the current rate of block production, the next Bitcoin halving is set to take place sometime in late February 2024, right? So that's why people are saying we still have some time to go. It's worth nothing that for every subsequent halving, the amount Bitcoin rally diminish and the time between the halving and the bull run peaks increases. This is likely due to the liquidity in the Bitcoin market increasing, dampening the effect of the supply reduction. However, if history is any precedent, the next halving should propel the top crypto substantially higher than its prior all-time high of 69,000, achieved in November 10, 2021. So if we are up to see an all-time high of Bitcoins again, will probably, following what already happened, historically happened, we will see a new all-time high on the Bitcoins in 2024, right? So, on caveat to the halving thesis is that the upcoming 2024 halving could be the first to take place under a bleak macroeconomic backdrop. If the world central bank cannot fix the current inflation crisis while maintaining economic growth, it could be tough for risk assets like crypto to rally even with the halving supply reduction. So, see, it's a combination of everything. The government need to fix the inflation, the interest rates, right? And halving. And we need to stop the war and this. And so there's a lot of little things that need to combine and work properly, correct in order for us to see a next all-time high of Bitcoins, right? I think I have one more. And the last one, the fourth one, loss of trust in central banks, which I believe at some point this will happen. And then we will see what we saw first here. Crypto adoption. For the guys, when this happened, the loss of trust in the banks, that's it. Crypto will take over. And it's not about, for me at least, it's not about when, if, it's about when that's going to happen, because it will happen, okay? I think, all right? So the last potential bull run catalyst is the most speculative of the examples listed in this article, but one that is definitely worth discussing. In recent months, the deficiencies in major central bank-run economies have become increasingly apparent. Most world currencies have plummeted against the US dollar. Bond yields have appreciated substantially as confidence in national economies decrease, and the central banks of Japan and the UK have resorted to buy their own government's debts to prevent default in a policy of yield curve control. We see now the dollar was so strong that all the other currencies was dropping, like falling, right? So the current debt-based finance system is reliant on constant growth. And when this stops, fiat currencies that aren't backed by anything suffer a very real risk of hyperinflation. Even before the current spikes, inflation due to supply chain issues, an extended period of low interest rates likely caused irreparable damage on the US economy. The cost of living, houses price, and company valuation soar while wage stagnated. Instead of using cheap debts to grow business and create real economy value, money borrowed money to purchase real estate or investment in the stocks. The result is a massive asset bubble that may not be able to be unwood without collapsing the world's economy. What we saw in 2028, right? When fiat economies shows weakness, gold and other precious metals have often been viewed as a safe haven from financial collapse. However, invest in gold-based finance products like gold ETF is not a viable option for most people, even those who do may still get caught in the maelstrom if contagion hits the broader financial market. This leaves Bitcoin and other hard, decentralized cryptocurrencies with a fixed supply as obvious candidates to replace gold as a store value if the public lose trust in national currency. Before the current financial crisis, investors had started to recognize Bitcoins as a hard currency due to the fixed supply of 21 million coins, earning the top crypto the title of digital gold. Among others, more recent top hedged funds managed such as Stanley Druckenmiller and Paul Tudor Jones have aired similar views in September CNBC interview. They said that crypto could enjoy a renaissance if trust in central bank wanes. Similar, Jones has stated that cryptocurrencies like Bitcoin and Ethereum could go much higher in the future due to the limited supply. So saying that, when people lose the trust in the central bank, that's it. Game over. It will be game over for the centralization. And we're going to see definitely a catalyst for an all-time highs of cryptocurrency in general. What do you guys think about that? And what do you guys think about all these four catalysts that maybe boost bull run again? And that's what we're looking for. That's what we want. And remember, we are in a position to zoom out, relax, patiently, and act only reasonable and not emotional in order for you not to get wrecked in the market. There is projects that will not succeed and not going to be here on the next bull. But there is plenty of projects that will. And those projects can make you a lot of gains and can multiply your investments. So be very careful, do your own research, make sure that the first thing you invest is yourself in knowledge and understanding. And then after, you can run and go for those. All right, I hope you guys enjoyed the show today. I'll see you guys tomorrow, and have a great end of the day. Ciao.